I think from a governance point of view, you simply have to do what is right from the start, rather than wait until much later. Sometimes for startups, they tend to think that getting the governance structure right is expensive, that it takes too much time. But I think in the end, it's worth their while to make sure that they get it right.
Just a decade ago, investments in financial technology were $930 million. Today, that number has reached nearly $20 billion. 450 million mobile payments were made last year, a seven-fold increase since 2009. As new advances in technology enable companies to reach customers who were previously left out of the financial system, providers are searching for ways to gain a competitive advantage. Industry specialists, from fintechs to traditional financial service providers, offer their insights for startups to build strong governance structures while navigating regulation and focusing on client centricity.
Fintechs move faster than regulation, right? So I think there's always a danger that they could be breaking rules they're not aware of, or rules that are going to come into play very quickly. So my biggest piece of advice to any fintech would always be to work closely with regulators, to understand the parameters with which they need to work, but at the same time not be afraid to push the boundaries and understand what rules are very relevant for financial inclusion, for transparency, for the protection of the customer, and what are taboos and stigmas which need to be challenged to drive financial inclusion. And that involves a very close engagement with the regulator.
As a regulator, I think it's very important for regulators like central banks or regulators of microfinance enterprises to embrace digitization as early as possible, to look into the policies and our guidelines, and when we get about our businesses, we have to incorporate anything to do with digitization in our policies, in our operations, just to ensure that we're not caught off guard.
There's a bit of regulatory lag. That regulatory lag will not last. Because of the fundamental changes in the financial sector, regulators will come up to speed. I'm not quite sure how, but it will happen. So the issue is that when it happens, how have you structured yourself? Who have you used to actually create the benchmark for how you handle data, how you secure data, how you respond to customer concerns, customer queries, things that you may not be thinking about now because fundamentally I'm a technologist and I want to do something, and I'm more concerned with the fact that my solution can do something with perhaps protecting the consumer. The regulator comes in, they say, well, look, this is what we require, and we will close you down if you don't have this.
But in order for us to sometimes step out of the echo chamber, especially in tech, we need people who have access but also have experience in emerging markets to provide us just real-time feedback to say, you know what, this is what the climate's like. This is what's actually happening on the ground. These are the people you need to know. And so that we can figure out how to take the technology, which may have a very clear answer agnostic to any other type of agnostic to any kind of environment, and I really say, how do we make this culturally and relevant for the institutions and the places we want to work with?
The governance issues that a lot of fintechs have is that they're dominated by one or two very strong individuals with a very clear vision. Sometimes you can run a risk that vision dominates everything else, and there are not enough people from a governance perspective pushing back and challenging the right way. It's not to slow things down and to dig your heels and make the whole process unachievable and too slow, because fintechs need to be fast, but there also needs to be someone putting checks and balances in.
So, if you figure out a system where you can gather lean insights, pull it together in a way that, tells a really coherent story and allows your board to be able to engage with that story over time, I think that empowers them to support you.
I think for fintech boards, learn, understand what incumbent businesses are doing, understand what the gaps are, and see how best to collaborate. I don't think that fintechs are going to take over, whether it's banks or MFIs, but I do think that fintechs can help us become more efficient and effective in what we already do.
from a fintech perspective, we've always seen it as a partnership. We have no intention to take over the banks. We really want to be partners, and yet I think there is an education gap in terms of what we can actually provide in terms of services, and what our responsibility is versus what the bank's responsibility is, and where there's overlap and where there's clear comparative advantages.
We're all has the mission to move people from using cash to digital money. So part of that is building an ecosystem. Partnerships is very important for doing that. So building all these kinds of use cases for digital money.
And ultimately that then comes to figuring out what are you really good at, what's core and non-core. And the stuff that's non-core, that means that you have to partner with people. So I was really excited to see that the conversation has evolved and people are starting to think about who do we partner with, what are the imperatives for success in those partnerships, because I think that's what's really important.
It's important that those who are also in the helms of governance in institutions have the right skills to be able to make the right decisions. And in a very changing world, governance will continue to be key.